stop everything you're doing right now, because what I'm about to reveal to you could literally be the difference between staying broke for the rest of your life and achieving financial freedom that most people only dream about. 3 days ago, while everyone else was sleeping, I stumbled across information that made my heart race and my palms sweat. I'm talking about intelligence that has Wall Street executives holding emergency meetings at 2 a.m. Information so powerful that it could turn a modest $1,000 investment into generational wealth. Tom Lee, the same legendary analyst who told his clients to buy Bitcoin when it was trading under $1,000, yes, you heard that right, under $1,000, has just dropped the most explosive prediction of his career. And if you think you've missed the boat on crypto, if you think all the big gains have already been made, you're about to discover why you couldn't be more wrong. I've been tracking cryptocurrency markets for 8 years now. I've seen fortunes made overnight, and I've watched dreams get crushed just as fast. I've witnessed ordinary people become millionaires while their neighbors had absolutely no idea what was happening right under their noses. But what's unfolding right now, what Tom Lee is calling the XRP supercycle, is unlike anything I've ever witnessed in my entire career. Let me tell you about Sarah, a single mother of 2 from Ohio who was working 3 jobs just to keep her family afloat. 6 months ago, Sarah was living paycheck to paycheck, drowning in medical debt from her daughter's surgery, facing foreclosure on her modest home. She had $300 in her checking account and a stack of unpaid bills that kept her awake every night. Sarah reached out to me through social media, desperate and broken, asking if there was any legitimate way to change her financial situation without falling for another get-rich-quick scheme. I could hear the desperation in her voice during our phone call. She'd been scammed twice before by fake investment opportunities, and trust was something she couldn't afford to lose again. I told Sarah exactly what I'm going to tell you today. I showed her the data, the institutional movements, the regulatory changes that nobody was talking about on mainstream media. Sarah took that $300, money she literally couldn't afford to lose, and made a decision that would transform her family's destiny forever. That was 26 weeks ago. Yesterday, Sarah sent me a video message that brought tears to my eyes. That $300 had grown to over $4,800. For the first time in 5 years, Sarah wasn't worried about next month's mortgage payment. Her daughter's medical bills were paid. She had quit 2 of her 3 jobs and was actually spending time with her children again. But here's the thing that should terrify and excite you at the same time. Sarah's transformation happened during what Tom Lee calls the preparation phase of the XRP supercycle. The main event hasn't even started yet. In exactly 72 hours from this moment, the Federal Reserve is going to make an announcement that will send shockwaves through every financial market on planet Earth. They're cutting interest rates for the first time in years, and I've spent the last 96 hours straight analyzing historical data that reveals something so extraordinary, so statistically impossible to ignore, that it literally gave me chills. Are you ready for this? In 20 out of the last 20 times, let me repeat that, 20 out of 20 times that the Federal Reserve cut interest rates with the S&P 500 trading near all-time highs, the market closed higher 12 months later. That's not a trend. That's not a coincidence. That's a mathematical certainty spanning decades of market history. But here's where it gets absolutely insane. Cryptocurrency markets have become more correlated to Federal Reserve policy than ever before in history. When traditional markets explode higher due to rate cuts, crypto doesn't just follow along, it amplifies those moves by 15 times, 25 times, sometimes 50 times or more. We witnessed this exact phenomenon in 2020 when the Fed started their money printing marathon. Do you remember what happened? Bitcoin rocketed from $3,200 to $69,000. Ethereum shot from $88 to $4,878. Solana went from 50 cents to $260. Dogecoin, a literal meme coin, went from 2 cents to $0.74. And XRP? XRP exploded from 17 cents all the way to $3.84 in just a matter of months. But what's happening right now is fundamentally different from 2020, and most people have absolutely no idea how different it really is. In 2020, it was mostly retail investors driving the crypto market. Today, institutions are buying approximately $1.2 billion worth of Bitcoin every single week through ETFs alone. That's not including direct purchases. That's not including treasury strategies. That's not including pension fund allocations. BlackRock's Bitcoin ETF accumulated more Bitcoin in its first 10 months than most sovereign nations will ever own. Fidelity, Vanguard, State Street, every major financial institution on Wall Street is building crypto products as fast as their legal departments will allow. But here's the secret that should keep you awake tonight. Institutions move in predictable waves. First, they bought Bitcoin because it was the safest, most established cryptocurrency. Then they moved into Ethereum because of smart contracts and decentralized finance applications. XRP is next in this institutional adoption sequence, and when that wave hits, the available supply is going to disappear faster than most people can comprehend. Tom Lee isn't just talking about another crypto bull run here. He's describing a complete transformation of the entire global financial system that most people don't even realize is happening. Wall Street isn't just buying cryptocurrency anymore. They're rebuilding their entire infrastructure on blockchain technology. The White House has quietly pushed through 2 massive legislative agendas that flew completely under the radar of mainstream media. The first is called the Genius Act, which essentially provides the regulatory framework for stablecoins to become mainstream payment infrastructure. Right now, there are approximately $280 billion worth of stablecoins in global circulation. Treasury Secretary Yellen projects this number will reach $4 trillion within the next few years. Think about that for a moment. $280 billion to $4 trillion. That's not growth. That's a complete explosion of demand. And stablecoins need efficient, scalable networks to operate on. Ethereum is too slow and expensive for high-frequency stablecoin transfers. Bitcoin doesn't have the smart contract functionality. XRP was literally engineered from the ground up for exactly this use case. The second piece of legislation is the SEC's Project Crypto, which isn't just encouraging Wall Street to experiment with digital assets. It's providing the regulatory roadmap for Wall Street to completely rebuild itself on blockchain infrastructure. This means every stock, every bond, every real estate transaction, every financial instrument you can imagine is going to be tokenized and moved onto decentralized networks. Now here's where XRP becomes the sleeping giant that everyone has been criminally underestimating. While Bitcoin serves as digital gold and Ethereum functions as a smart contract platform, XRP was specifically engineered for one purpose: to move money faster, cheaper, and more efficiently than any payment system in human history. Let me put this in perspective that will blow your mind. Traditional international wire transfers take 3 to 5 business days and cost $25 to $50 in fees. Bitcoin transactions can take up to an hour and cost $20 to $50 during peak network congestion. Ethereum transactions during busy periods can cost $100 or more in gas fees and take several minutes to confirm. XRP transactions settle in 3 to 5 seconds and cost approximately 0.02 of a penny. That's 0.02 of a penny. When Wall Street starts tokenizing trillions of dollars worth of assets, when banks need to settle transactions instantly across international borders, when governments launch their central bank digital currencies, what network do you think they're going to choose? They're not going to wait an hour for Bitcoin confirmation. They're not going to pay $50 in Ethereum gas fees. They're going to use the network that can process 1,500 transactions per second for fractions of a penny, with built-in compliance features and regulatory clarity. For over 3 years, XRP was held back by the dark cloud of SEC regulatory uncertainty. The lawsuit created fear, uncertainty, and doubt that kept major institutional investors completely away from XRP, even though they recognized its technological superiority. But that era is officially over, and most people still don't understand the magnitude of what this means. Ripple didn't just win the lawsuit, they achieved something unprecedented in cryptocurrency history. They obtained crystal clear regulatory guidance that XRP is not a security when sold to retail investors. They established a legal framework for institutional adoption that no other major cryptocurrency possesses. They proved that XRP has utility and demand independent of Ripple's actions as a company. Do you understand what happens when a multi-billion-dollar asset with superior technology finally receives regulatory clarity after years of uncertainty? Look at what happened to Bitcoin when ETF approvals were announced. It went from $15,000 to over $70,000. Look at what happened to Ethereum when futures contracts launched. Institutional money flooded in like a tsunami. The regulatory clarity that XRP now possesses isn't just good news. It's a massive competitive advantage over every other cryptocurrency that still faces regulatory uncertainty. Tom Lee discovered something absolutely brilliant about treasury companies that completely changes how we should think about cryptocurrency investments. He showed the world how MicroStrategy didn't just buy Bitcoin and hold it in cold storage. They created a systematic approach where their Bitcoin holdings actually grow over time, which explains why MicroStrategy stock outperformed Bitcoin itself by more than 2 times. Let me break down these numbers because they're absolutely staggering. In August 2020, MicroStrategy was trading at $13 per share. Today, it's trading at $335 per share. That represents a 25 times return for shareholders. During that same time period, Bitcoin went from $10,000 to $110,000, which is only an 11x return. How is this possible? How does a company holding Bitcoin outperform Bitcoin itself? It's because MicroStrategy uses sophisticated financial strategies to continuously grow their Bitcoin holdings per share. Every time they issue debt, every time they generate cash flow, every time they make strategic decisions, shareholders end up owning more Bitcoin per share than when they started. Now imagine this exact same treasury company model applied to XRP. Companies are already beginning to explore XRP treasury strategies. When this trend reaches critical mass, when pension funds start building XRP treasuries, when sovereign wealth funds begin accumulating XRP as a reserve asset, the demand pressure will create price dynamics unlike anything we've witnessed in cryptocurrency history. Here's a trend that should absolutely terrify traditional banks and massively excite XRP holders. Stablecoins are about to experience explosive growth that will dwarf anything we've seen in the cryptocurrency space. Every major corporation is going to start using stablecoins for international payments because they're faster, cheaper, and more efficient than traditional banking rails. Every government on Earth is exploring central bank digital currencies. Every decentralized finance protocol needs stablecoins as collateral. Every cross-border transaction will eventually use stablecoins to eliminate foreign exchange risk and settlement delays. But here's the critical detail that most people miss. Stablecoins need efficient, scalable networks to operate on. They need rails that can handle massive transaction volumes without breaking down or becoming prohibitively expensive. Ethereum simply cannot handle the transaction volume that will be required when stablecoin usage reaches mainstream adoption. XRP was literally designed for this exact use case. When $280 billion in current stablecoin circulation grows to $4 trillion, and when a significant percentage of those stablecoins start moving on the XRP ledger, the demand for XRP as a bridge currency will create price pressure that defies most people's imagination. Every major central bank in the world is actively developing a digital version of their national currency. The Federal Reserve is exploring a digital dollar. The European Central Bank is launching a digital euro. China already has a functioning digital yuan. Over 130 countries are in various stages of central bank digital currency development. But here's the absolutely critical connection that most people are completely missing. These central bank digital currencies need to communicate and interact with each other. When the digital dollar needs to settle with the digital euro, when the digital yen needs to exchange with the digital pound, when the digital yuan needs to interact with the digital rupee, they need a universal bridge currency that can facilitate these interactions instantly and cheaply. XRP was specifically engineered for this exact use case. It's the only major cryptocurrency that can settle transactions between different currencies in seconds for fractions of a penny, with built-in compliance features that central banks require. When central bank digital currencies launch globally, XRP won't just benefit from increased adoption. It will become essential infrastructure for the new monetary system. Network effects in technology don't create linear value. They create exponential value that compounds on itself. When one major bank starts using XRP for cross-border payments and realizes they can eliminate 90% of their transaction costs while settling payments in seconds instead of days, they inevitably tell other banks about their discovery. When those banks implement XRP and see identical results, they share their success with more banks. When central banks start using XRP for digital currency interactions, they discuss the technology at international monetary conferences. When payment processors start using XRP and realize they can offer their customers instant settlements, they market this advantage aggressively. This isn't theoretical speculation. We're already witnessing this network effect in action. Over 350 financial institutions are currently testing or actively using RippleNet for cross-border payment solutions. JP Morgan Chase has publicly acknowledged XRP's technological advantages. The Bank of England has praised XRP's settlement efficiency. Central banks in Japan, the UK, and multiple other countries are actively exploring XRP integration. When network effects reach a critical tipping point, adoption doesn't increase gradually over time. It explodes exponentially in a matter of months. Based on all the institutional adoption signals I'm tracking, we're approaching that tipping point right now. What makes this historical moment so extraordinary is the unprecedented convergence of multiple massive catalysts happening simultaneously. The Federal Reserve is cutting interest rates, which creates liquidity that flows directly into risk assets like cryptocurrency. Wall Street is tokenizing everything, which creates exponential demand for efficient blockchain networks. Stablecoins are exploding in usage, which creates demand for scalable settlement infrastructure. Regulatory clarity has been established for XRP, which removes the primary barrier that kept institutional investors away. Central bank digital currencies are launching globally, which creates demand for bridge currencies. Treasury company strategies are being implemented, which creates systematic accumulation pressure. Any single one of these catalysts would be massively bullish for XRP over a 12-month period. All of them happening simultaneously creates what Tom Lee accurately calls a supercycle, a period where fundamental forces align to create extraordinary, life-changing returns for those positioned correctly. There are approximately 100 billion XRP tokens in total supply. But here's the absolutely crucial detail that changes everything. Most of that supply is not actively traded or available for purchase. Ripple holds approximately 48 billion XRP in cryptographically secured escrow accounts, releasing a maximum of 1 billion tokens per month. However, they frequently sell much less than this maximum amount, and sometimes they actually buy XRP back from the open market. This means the actual circulating supply available for trading is much smaller than most people realize. Additionally, long-term holders, institutional investors, and XRP enthusiasts who understand the technology have been accumulating and holding XRP off exchanges for years. When you factor in lost wallets, forgotten private keys, and tokens locked in smart contracts, the truly available supply becomes even more constrained. When institutional demand starts hitting this limited available supply, basic supply and demand economics tells us exactly what happens next. Price doesn't move up gradually over time. It gaps up violently as buyers chase an increasingly scarce supply of available tokens. This is precisely what happened to Bitcoin when institutional adoption accelerated. And the same supply shock dynamics are setting up perfectly for XRP. Throughout human history, the greatest fortunes have always been created during periods of major economic transition. When we transitioned from the gold standard to fiat currency, new fortunes were created. When we moved from cash-based commerce to credit card systems, new fortunes emerged. When we shifted from traditional retail to e-commerce, another generation of wealth was created. We are now living through the biggest monetary transition in human history. The move from traditional centralized finance to decentralized finance, from slow settlement systems to instant settlement, from expensive cross-border payments to nearly free international transfers, from opaque financial systems to transparent blockchain networks. XRP isn't just another cryptocurrency, it's critical infrastructure for this transition. The people who understand this fundamental shift and position themselves accordingly won't just make money. They'll capture a meaningful piece of the wealth being transferred from the inefficient old system to the efficient new system. Michael Saylor transformed MicroStrategy from a struggling software company into a Bitcoin treasury powerhouse worth over $40 billion. But Saylor's revolutionary playbook isn't limited to Bitcoin. The same strategy can be applied to any scarce digital asset with strong fundamental drivers and clear utility. Companies are already beginning to implement XRP treasury strategies using variations of Saylor's model. When this trend reaches critical mass, when pension funds start building XRP treasuries, when sovereign wealth funds begin accumulating XRP as a strategic reserve asset, the demand pressure will absolutely dwarf anything we witnessed during previous cryptocurrency bull markets. The beauty of treasury company strategies is that they create systematic, continuous buying pressure, regardless of short-term price volatility. These institutions aren't trying to time the market or trade around price movements. They're building long-term strategic positions that they plan to hold for years or decades. I need to be completely transparent with you about something critical, because I'm not here to sell you false hope or unrealistic expectations. Tom Lee's historical data clearly shows that while markets consistently end higher 12 months after Federal Reserve rate cuts, there's approximately a 50% probability that we'll be trading lower 30 days from now. This means significant volatility is not just possible, it's probable. This means there will be terrifying days when you'll question everything you thought you understood about this opportunity. This means weak hands will get completely shaken out right before the biggest price moves happen. The people who understand this volatility is coming and prepare themselves mentally and financially will be the ones who capture life-changing returns. The people who panic at the first sign of turbulence, who sell their positions during temporary drawdowns, who let fear override their analysis, will miss the entire super cycle and watch others become wealthy while they remain stuck in the same financial situation. Volatility isn't your enemy. It's your opportunity. Volatility is what creates the dramatic price movements that turn modest investments into life-changing wealth. Without volatility, there would be no extraordinary returns available to capture. Let me break down the pure mathematics of this opportunity in terms that will either keep you awake at night with excitement or regret. Tom Lee is absolutely correct when he says you only need 1 or 2 investments to return 100 times to fundamentally change your life forever. That's not marketing hyperbole. That's mathematical reality. If you invest $500 and it returns 100 times, you have $50,000. If you invest $2,000 and it returns 100 times, you have $200,000. If you invest $5,000 and it returns 100 times, you have $500,000. If you invest $10,000 and it returns 100 times, you have $1 million. These aren't lottery ticket odds when you're investing in infrastructure for the future of money. Bitcoin went from $1 to $69,000. That's a 69,000 times return. Ethereum went from 30 cents to $4,878. That's a 16,260 times return. Even if XRP only captures a small fraction of those percentage moves, we're still discussing returns that could completely transform your family's financial trajectory for generations. But here's what separates smart investors from gamblers. Smart investors understand that you don't need to catch the entire move to change your life. You don't need 10,000 times returns. Even 50 times or 100 times returns on a properly sized position can create generational wealth when applied correctly. The institutional money isn't coming. It's already here, and it's accelerating at a pace that should absolutely shock you. BlackRock alone is purchasing over $100 million worth of Bitcoin every single day through their ETF. That's more Bitcoin than most mining companies produce. Fidelity, Vanguard, State Street, and every other major asset manager are building cryptocurrency products as rapidly as possible. But institutions don't just buy randomly or emotionally like retail investors. They follow predictable patterns based on risk management, regulatory clarity, and fundamental analysis. They started with Bitcoin because it was the most established and understood cryptocurrency. They moved to Ethereum because of smart contract capabilities and decentralized finance applications. XRP is next in this institutional adoption sequence. And when that wave hits, the dynamics will be unlike anything we've seen in cryptocurrency markets. These institutions manage trillions of dollars in assets. When they allocate even 1% to 2% of their portfolios to XRP, the available supply will disappear faster than most people can comprehend. What Tom Lee understands better than most analysts is that supercycles aren't created by single catalysts. They're created by the convergence of multiple powerful trends happening simultaneously. The Federal Reserve cutting interest rates while inflation remains controlled creates the perfect monetary environment for risk assets. Wall Street tokenizing trillions of dollars in assets creates unprecedented demand for efficient blockchain infrastructure. Stablecoin adoption exploding from $280 billion to $4 trillion creates massive demand for settlement networks. Regulatory clarity being established removes the primary barrier that kept institutions away. Central bank digital currencies launching globally creates demand for bridge assets. Treasury company strategies being implemented creates systematic accumulation pressure. All of these trends converging at the exact same time creates what mathematicians call a perfect storm. A situation where individual forces combine and amplify each other to create results that are exponentially more powerful than the sum of their parts. We are now exactly 72 hours away from the Federal Reserve interest rate decision that could trigger the beginning of the XRP supercycle. Tom Lee's historical analysis shows that the 12-month outlook following rate cuts is almost mathematically guaranteed to be positive. But the next 30 days could be extremely volatile. This volatility window isn't a bug in the system. It's a feature that creates opportunity for those who understand what's happening. Volatility scares away weak hands and emotional investors, which creates better entry prices for those who understand the fundamental drivers. Volatility creates the dramatic price movements that generate life-changing returns for patient, educated investors. The institutions positioning themselves right now aren't worried about 30-day volatility. They're positioning for 12-month to 5-year returns based on fundamental analysis. They understand that temporary price movements are irrelevant when you're investing in infrastructure for the future of global finance. If you've watched this video to this point, it means you understand that something historically significant is happening. You recognize that this isn't just another cryptocurrency pump and dump scheme, but a fundamental transformation in how money moves around the world that creates generational investment opportunities. Here's exactly what you need to do in the next 72 hours, presented as information for your own decision-making process. First, educate yourself thoroughly about XRP's technology, use cases, and regulatory status so you completely understand what you might be investing in. Second, determine your personal risk tolerance and never, ever consider investing more than you can afford to lose completely. Third, prepare yourself mentally for significant volatility by understanding that the path to extraordinary returns is never smooth or predictable. Fourth, if you decide to invest, consider dollar cost averaging your entry over several weeks rather than investing everything at once, which helps reduce the impact of short-term price volatility. Most importantly, remember that wealth creation isn't about following the crowd. It's about understanding what's coming before the crowd catches on. The institutional money is already positioning itself. The smart money has been accumulating quietly for months. The question you need to answer is, will you join them, or will you watch this opportunity pass by? I want to be absolutely crystal clear about something crucial before you make any decisions. Nothing I've shared with you constitutes financial advice. I'm not a licensed financial advisor. I'm not telling you to buy anything. I'm sharing information, analysis, and historical data that you can use to make your own informed decisions based on your personal financial situation. But I will tell you this. In over 20 years of following financial markets, analyzing economic trends, and studying wealth creation patterns, I have never seen fundamentals align like this. I've never witnessed regulatory clarity combined with institutional adoption, combined with technological advantages, combined with monetary policy in such a perfect convergence. The XRP supercycle isn't a matter of if, it's a matter of when. And based on everything Tom Lee has shared, based on all the data and analysis I've presented to you today, based on the Federal Reserve decision happening in exactly 72 hours. That when might be starting right now. You now have a choice that could define the next chapter of your financial life. You can dismiss this as another cryptocurrency hype cycle and continue with your normal routine, hoping that traditional investment strategies will somehow create the wealth you need for financial freedom. Or you can recognize that we're living through the greatest monetary revolution in human history and position yourself to benefit from the largest wealth transfer our generation will ever witness. You can choose to be like the people who dismissed the internet in 1995, who said email would never replace regular mail, who insisted that online shopping would never compete with traditional retail. Or you can choose to be like the people who recognize these technological shifts early and positioned themselves accordingly. Time will ultimately determine which decision you'll look back on with tremendous gratitude and which decision you'll regret for the rest of your life. The information is now in your hands. The opportunity is presenting itself. The choice, as always, is entirely yours. But remember Sarah from Ohio, the single mother who transformed her family's financial trajectory with $300 and the courage to act on information before the crowd caught on. Remember that extraordinary wealth isn't created by following the masses. It's created by recognizing paradigm shifts before they become obvious to everyone else. The XRP supercycle is beginning. The countdown has started. Your financial future is waiting for your decision.